Good morning, traders. It's Monday, June the 5th. Taking a look at the charts, we got the SPY ETF here, and I've overlaid some cycles on here, some basic time cycles. And you can see here from the lows as the market goes, we can see the market kind of rallies and it gets weaker near the end of the cycle. And you can see where we're at in the grand scheme of things here. We're kind of working our way up. We're getting close to the top, the crest of the cycle, but you got to keep in mind the overall trend is up. And when the trend is up, the equities market can continue to rise until the very last little bit of a downward cycle. Much like we saw over here where the market more or less topped out and the cycle topped out, equities really just pulled back, they traded sideways, and they continued to actually push higher even though the cycle was coming down. And you don't really see a drop to the very last little bit. And you got to remember some of the biggest drops in the market happen right at the end of a cycle or a move, which looks like a capitulation type of washout. It's just the way the markets move. So got to be aware that just because we're kind of here at the top and price is coming up and looks as though it's also at the top, it doesn't really mean anything. Just look at this one here, same type of thing. We had a pop in price. Market was had just topped out. The cycle had just topped out, starting to go down, and we saw the market continue to rip to the upside. And until the very last little bit here, this little bit of the downward move, this is where we saw a three-wave correction down into the cycle low. So we could easily still see, we've got a target here at the 250 mark area. We could easily see this eventually somehow get up there before this cycle ends, and we still have quite a bit of time. We still have another month or two really of price action, actually a couple months of price action before the cycle actually really does rotate all the way down, and we could see that next pivot low. So that's kind of where we are in the grand scheme of things. Trend is up, and we continue to have an upward bias in the grand scheme of things going forward. Now let's just take a look over here at let's jump to crude oil real quick. Crude oil had a bounce there last week on Friday, came down, and if we go to the 30-minute chart, I showed you the. Let me just focus on price here. Zoom back. We drew in the Fibonacci extension level here, going from the high down to this low and back up to this high, giving us this bear flag. Let me just draw if you can't see it. More or less we had a sell-off, and then we had this bear flag. And so price went down, it came down to this lower level, which is one of these lines right across here, these gray lines, and came up to this gray line across here, and it gives us the measured move, the 618, which it hit, and a little bit of a bounce. Typically, if it bounces off the 618, usually you see the 100% measured move, which it did. It came down, bounced off the 618, came down, and in pre-market trading hit the 100% measured move, and then more or less bounced for the rest of the session. And it kind of just continued to rip to the upside. Now overall, the bias is still down, and again, this drop happened in pre-market trading where the equities market opened higher over here, not allowing you to really get out down at this ultimate level. But the selling pressure continues to carry on. There's a lot of distribution going on in crude oil, which is why we're still in the trade. If we take a look at price action, we've had a lot of heavy volume in the markets, lots of clusters of red, and when there's red, we're seeing some really big downward moves. So there's a lot of dumping of oil, and we're starting to see that again today in pre-market. We got some pretty good pre-market volume already, and it's already selling down, and we get very easily fall past this level. Now, if we were to just zoom out a bit, where do I need to zoom out to see these lows? So the next downward move is actually down here around the 46.44, which breaks this one that we had down on Friday. So we could easily come down, poke down to a nominal new low, and we could get a bounce from there. This could trigger as a three surges to a low pattern, which I've talked about before, where more or less we've got a break and then a bounce, and then we've got 1, 2, 3, and then we could see a very strong reversal and start to see things turn around. So that's what we're going to be aware of. If we do get down to this 46.41 area, this is crude oil continuous contracts, so futures, if you're trading them, might be a little bit different pricing wise. but we could be pulling the rest of our position off or really ratcheting up our stops, moving our stop to this pivot high just above it. And we could see if we do get more of a complete washout low and come down to this double bottom here around the 44 to 43.80, which would be over here, which is where we saw the last big rally kick into place. So that's what we're looking for there. In terms of precious metals, they continue to kind of grind their way up. Let me go back to the daily chart. Here's gold, daily chart, and I'll zoom in a bit here. Overall, we're kind of in an uptrend here still, and higher lows, higher highs, and the market's coming up here. I do feel as though it's going to eventually stall out. It's kind of doing this slow grind up. 1300 is going to be a very significant level. If we can break that and close above it on a weekly basis, then it could be a game changer, and we could see more or less the bottom put in, and we could see potentially a new leg higher in gold and silver. Let's take a look at silver real quick. Silver kind of popping up, had another little washout low here, rebounded to new highs, continues to kind of work itself up here again, but it's got lower lows. It's got a mixed broadening formation where it's got a higher high and a lower low. And if we take a look at the GDX, GDX kind of been flatlining. It does have a bull flag here, but in the grand scheme of things, it's in a larger pattern, a larger coil. You could argue right across this here that if it breaks out of this pattern in either direction, we're probably going to see a fairly significant move. But really, it's almost trading right in the middle of this whole range, right where this high volume is, these blue bars. It's stuck right in that range, and we'll see what happens with that. Now, if we take a look at the US dollar index, here's the US dollar index, and overall, it's getting close to putting in a bottom. This is a very, we're getting into a bullish formation. Yes, the trend is down, but this is getting us very close to an oversold type of knee-jerk reaction bounce, something very similar to something over here in the market. I feel as though there might be just kind of a little bit more washout low, one final stretch down in price, and of course this final stretch down will send commodities, precious metals higher. Obviously a falling dollar helps boost the price of gold and silver and miners, and that could be that final squeeze higher, but then we could get into some of this pretty big reversal rallies where we get some screaming strong rallies. We'll get volatility, sharp pullbacks, but very strong rallies to the upside. And this obviously these rallies will put some damage, some downward pressure on precious metals. So that's where we're at. We're at a pretty volatile time where it's dragging a little longer than I anticipated, but I really like this formation, this price going up, and the way that it's going down and picking up speed into a capitulation drop down into this volume level, right down into here. I think it's going to post for a pretty big, significant bounce. But until we get that, precious metals are going to continue to be in favor with a weaker dollar, and still there's fear in the market that equities are going to roll over and sell off. So money is still kind of holding up, but I do feel as though that is coming to an end, and we're going to see the dollar have a sharp rebound. Let's just move over to natural gas real quick, take a quick peek at what's going on over here. More or less, it's been kind of bouncing around. It had this little mini, you could argue it's a little head and shoulders formation. You could argue right here, we got a little shoulder, a little head, another shoulder. We've got this neckline across here, and it did break that neckline. Overall, the way it works is this from the neckline to the, let me get a different tool here, from the neckline to the top of the head, you can take that pattern and flip it to the downside for a downward target, which is more or less 1, 2, 3. So 1, 2, 3. So we could see that potential downside move somewhere down here into the 290 zone, and this pattern here looks as though it's about to continue lower. Got a sharp move down, and it's continuing to hold downward pressure. Once this gives, we can see the second half of that move unwind into this lower level here, which would potentially test this area here as a support zone, potentially run it, meaning it breaks just below it. And we could see a knee-jerk reaction back up to the 3 or 310 mark after that. So that's what the short-term price action is pointing to for natural gas. Last but not least, let's take a look at the two leading kind of indicators for the equities market. This is the IYT, the transportation average, and typically we want to see this lead the way higher. And in the grand scheme of things, really since December, we've seen the transportation index trade sideways to lower, just not leading the way. It has had a very strong move the last couple weeks here to the upside, but we do need to see it break out and start to push to new highs for a real kind of confirmed new major leg up higher in the equities market. And even more importantly is the IWM, the Russell 2000. These are small cap stocks. Exact same type of thing. It's held up in a little bit of a cleaner pattern, more or less. But again, since December, we've seen small cap stocks just trade sideways. Pretty nice pop last week. It kind of went into a washout low and a strong rally in up to the highs again. And small caps have been a tough trade this year. They've been kind of few and far between. They haven't had huge follow-through moves. Very hard to catch. But once this Russell 2000 breaks to the upside, that means on average small cap stocks are in favor, and those are when we start to see a lot of active trades really pick up speed and run to the upside. So you can see the last 3 days we've had some pretty good life, some volatility, some strong moves up, and we've seen some big moves in small cap stocks, some of the little leading ones, and of course they can move very quickly. And we're just hoping we're going to see this kind of breakout and continue up. And I think this is what could definitely help carry the equities market, like the SP 500, up to that 2,500 mark going forward, looking forward another month or so. So you can see the last leg that we had here in small cap stocks. Once they got in favor, man, did they ever take off, and they ripped to some pretty extreme highs. This type of volatility right here, these big up bar, kind of two big up bars with a gap here, kind of feels similar to what we're seeing over here from the low to the high. I think this was like an 8 or 9% swing. I can't remember what it was. Maybe in the leverage ETF it was. But either way, these two moves here are big moves showing there's some strong momentum starting to rotate into the safe haven plays. And this could be the start of the next big leg up in small cap stocks. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.